entrepreneurship center that's hosted by Napa Valley College. It's active in the north 6 counties of the Bay Area. But we're going to talk about crowdfunding. We're going to talk about accessing capital. And you know what that is, right? And nobody knew. It's kind of interesting because in my mind's eye, this is kind of mainstream now, but not really. You know, there's still a lot of people that don't really know about this. So this is, in essence, is some alternate forms of accessing capital, which I think is very cool.
Kiva Zip. So Kiva.org was founded in 2005 in answer to the question of how can we connect people in places like the US and Europe with access to funds that they really want to be connecting with people around the world as individuals and funding them with entrepreneurs around the world who something like $200 could irrevocably change their lives and, you know, help them start a business. So we kept getting the question from folks, particularly in the US, so why can't we make loans to people in our own backyards? We know lots of entrepreneurs with small businesses who need access to loans, and as Charlie mentioned, we discussed 7 out of 10 small business loans are rejected. So why can't we start something like this here? So in addition to that, we know that 2 out of 3 jobs, the majority of jobs are created by small businesses. There are all these great reasons why we need alternative models, hence, you know, this forum and all of these folks looking at innovative ways to support entrepreneurs in accessing funding. So that launched us into Kiva Zip. So 2 years ago, we founded Kiva Zip. It's piloting in the US as well as in Kenya. We're able to use PayPal. Our president was on the ground level with PayPal, so we're able to use PayPal with no fees, which allows us to actually do 0% interest, which differentiates us from Kiva.org, where we work through microfinance institutions around the world. So we use a small percentage rate to pay those costs. But in the US, we're able to actually do it direct, person to person through PayPal. It works similar to Kickstarter and some of the others in that you only get funded once your entire amount of your loan is fully funded. So we're functional in the US, as I said, and in Kenya. It also allows this great platform for borrowers to interact directly with lenders. So as I mentioned for Kiva, it's not just the money, but it's actually the relationships that are built. So borrowers are often updating the website and communicating with the folks who have lent to them, letting them know what the progress is of their business. Oftentimes it's in people's own community. So we have lenders getting on and saying, I can't wait to try your product, and becoming brand ambassadors for their business as well. We've also had folks who have invested in the businesses outside of just Kiva. Maybe they're looking to become, partners, looking at equity. So it's created an entire platform for resource sharing and relationship building outside of just the access to capital.
2 primary areas that have been shown time and time again through polls and other surveys have been access to land and access to capital. So we work on both these programs simultaneously. Quickly, the access to land program, we really want to maximize the ability to get as many farmers onto properties with good written lease agreements as possible. And so we have an online site where landowners and farmers can register in. Landowners can actually list their properties, and farmers can contact landowners to see if that you can find a match. And then at that point, we're willing to actually basically develop the lease for them for free. We still expect that someone would have a lawyer to make sure it all checks out, but beyond that, our main goal is to set up a lease that works for everybody. On the financing side, in 2011, we gained status as a Community Development Financial Institution, a CDFI, which is basically one of those agencies the SBA and other funders provide money to and also give us risk-backed security. And so starting then, we started to look out in our loan program. We work in three main areas. Up in the North Coast, North Bay, in Sacramento, Central Valley, and down in the Santa Cruz area. We really want to focus on underserved populations, beginning farmers, minorities, women, undocumented, people with language barriers, and really provide loans to people who otherwise wouldn't get them. So lack of collateral, maybe they haven't been operating for very long, or they don't even have a business going yet. The only things you need to qualify for a farm to apply for a FarmLink loan are that you've been working on a farm for at least 2 years, whether it's yours or someone else's, and that you have a really clear plan for what you want to do in terms of running a farm. That's it. At that point, like in order to offset the fact that you might have limited credit history, limited collateral, other types of issues that would normally reject you from an SBA loan or other type of loan, we really focus more in on your character. We focus more in on, do you have the ability to pay the loan if the farm goes south? Do you have supply or buyers in place that you've already sort of spoken to that say, oh yeah, we'd be happy to buy their product? Who are the people that you work with? Can they vouch for you that yes, this is a person who's bona fide and really has something going on that is going to be viable? We do 2 types of loans. Basically, we provide loans of $5,000 to $250,000 and at 7% fixed interest. We have 2 types of loans we do. The most common, most popular one, and I think a niche that we really focused in on that seemed to be really popular, are 1-year-long production operating loans. And we've got farmers down in Santa Cruz area that are basically getting loans from us every year so that they can plan out their farming for the next year, scale up operations year by year, you know, 15,000 one year, 50,000 the next, 80,000 the year after that, and really start to grow out their businesses that way.
Our average loan size is $25,000, and our lending range is $5,000, the lowest amount, and the maximum for a startup company is $25,000, and the maximum for an established, profitable company is $50,000. And so a startup would be considered any company that is 2 years or less in existence and may not have any sales revenue yet. We do startups, we do pre-sales stage, so you don't actually have to have any revenue to be a borrower of ours. And when we're looking to lend beyond that $25,000 threshold, we're looking for the company to be beyond that break-even point and making a profit, even if it's just $1. You know, just a very minimal amount of profit to show that they've kind of rounded that bend. We kind of have 2 different categories for qualifications or eligibility for our companies. And for a startup, we're looking for a couple things. One is same industry paid experience. So if you do have experience in the industry that you're about to launch a business, that's a huge indicator of success. And if you are going into a startup business and you have absolutely no experience in that industry, that is also a key indicator of failure.
There's a good chance if you go back home and research where your money sleeps at night, you will find there's actually some money in the S&P 500. And if you have money in the S&P 500, you do have money in Monsanto, Coca-Cola, Kraft, Texaco, Exxon, and a lot of usual suspects that you probably wouldn't want to choose if you would make a conscious decision to put your money into this. So all of a sudden, I think the craziness is a little bit more on the other side, as we often don't know where our money is. And slow money is basically a movement across the United States where we put our money into specific food businesses that we actually know, and we know where our money sleeps at night. So with edible credits is about, if you can go to the next slides, it's about paying for your food that you eat all the time in advance. So it's prepay, pay in advance for food that you eat all the time anyway, and you get edible credits for that food. And in the meantime, the business has the money to do good things, but put it to work, invest it into the growth or the operations of the business. And then you can also track your balances on, there's an app for that. There's a Credibles app on your phone. If you go to a restaurant, they look up your balances on their app and transact basically what you have left in your tab. So it's actually, people always say, oh, this is so simple. It's just like a flexible gift certificate, and I paid up front so people renew it. Some people have been on their 4th funding of $1,000 prepayment already. So these things become a habit. What's really nice for customers is people tell us, oh, I just go in there and I just give them my name and I give them my wallet. And sometimes, like a mom told us, like, I'm going in from the playground and I just want to get a smoothie and I don't have my wallet with me. I just give them my name. and also like the customer gets closer to the business?
I grew up in Texas. I wasn't born there, but I grew up in Texas, but most of my adult life in Austin. Ended up out in California about 2-3 years ago. Started looking around at the landscape, literally, and I'm a huge sustainable ag advocate. And my former partner is really involved in slow money, so I got to know some of the farms and the farmers. And I started thinking, there's amazing stories, gorgeous animals, amazing food, and there's very little marketing money and almost no video around that whole sphere. So for me, I saw that as an opportunity, and I got tired of the answer being there's no money. That gets really boring after a while. So I thought, well, let's just try crowdfunding. Crowdfunding, in terms of the way I'm using it today, is purely a donation. You don't get your money back. So some of the, I'm sure some of you have heard of Kickstarter, Indiegogo. These are different, there's a lot of different platforms that you can choose from. And I'm not positive about this, but my guess is like what Kickstarter is kind of the one that's known the best. I chose Indiegogo because in Indiegogo you get all your money. Kickstarter, you have to make your goal or you don't get any of your money. Indiegogo takes 9% if you don't make your goal, and I think 6% or 7% if you do make your goal. But with Indiegogo, you get what you do raise. And then there's other different ones that they all have their own little differentiating niche depending on what your project is. And that kind of gets into, so like Indiegogo and Kickstarter, they accept a lot of different kinds of projects. And it's probably come down to the 80-20 rule, and kind of applies across a lot of different areas. About 20% of the projects garner about 80% of the funds that are raised through those platforms. So that's led to the rise of some niche platforms. For example, Mula Hoop is for women-owned businesses, and Pub Slush is for authors. There's a lot of different, and food. In fact, Arno brought this. This is kind of evaluating food-based crowdfunding platforms for different food companies. It's very much an audience-based process. Like, who's your audience? What do they care about? And why should they care about what you're trying to do? And if you can answer those questions, it'll really help you with fine-tuning your pitch to get them to actually pull out their credit card and donate. So Indiegogo says, and I agree, your pitch should be open and transparent. You should be really enthusiastic, show your passion. It's your storytelling, it's an emotional appeal. Don't include a lot of technical details in your pitch, because that's what the website's for, that's what the written material's for, that's what the information outside of this campaign is for. Your pitch is more about your passion and why it's important, what problem you're solving, what changes you're gonna make, all those good, like, emotional, juicy bits.